Hello everyone and welcome. Thank you for joining our technical analysis webinar with Trevor Neal. We'll aim to cover everything in approximately 30 minutes, although we may spill over a little bit. If you have any questions for Trevor, as always, please ask them in the questions tab, which you can find in the little go to webinar window there. And please try to keep the questions on topic. We had a few comments last week about that the attendees couldn't find or download the handout. Now, every week we've been offering a handout, which is gives you a guide to the indicators that Trevor's using. If you can't find it, it should be in the handouts tab. There should be a little 1 of 5 next to it. You click in there and it's a downloadable PDF. If you're having any problems locating or downloading it, please just let me know in the questions tab and I'll send you a link. We strongly recommend you use the handout if you're new to trading, as it will help you understand the different indicators that Trevor's using and his thought processes when he's using them. So for those of you who don't know Trevor, I'm sure you all do by now, but I'll just give you a brief intro. Trevor has over 40 years experience as a technical analyst and trader. He's worked for very large companies such as Merrill Lynch and Bloomberg, where he was global head of technical analysis. He was also founding member of the Society of Technical Analysts in London, which is an institution that accredits technical analysts. So without further ado, let's get started, shall we? What do we have this week, Trevor? USD weakness, I imagine, will be the main theme. BTC, I like this. BTC gone parabolic. I think that's a nice one this week. It'll be interesting to hear your thoughts on that. And also stock of the week, Glencore, a mining company. That'll be something new to us. So Trevor, take it away.
Yes, indeed. Well, it's been a big day actually on the dollar. A big swing you see here on the euro. A massive range today, and trading around the opening levels of this morning, back near those levels. But what have we got? Generally, the longer term trend in the dollar is still down, but today's trend has been a bit of a counter trend move. Well, let's start with the euro versus the dollar. Firstly, it's steady rather than particularly strong. It's really in this broad range. The 1950 to 116 down to 116 range. It is at the top end of the range and consolidating around there. But if it can break, there is further resistance up at 122. But it is not the best place to play the weakness of the dollar. Moving on to sterling. Sterling has been strong in recent weeks. And it was very strong early today. I mean, very strong early today. We were trading right up here at 133.97, nearly 134 we got to today. But we've come back sharply as we've had that move in the dollar. But 133 is support for it, light support, but it should be enough to hold it, I think. The August high at 134.50 should be resistance, and I think that we're on our way to clearing that, and I don't think it's strong resistance. Look at the behavior there, just a small spike there. Support is as I say, from 133 and then very, very strong from 134.31 downwards. It's worth having a look at this from a weekly perspective. So that was a daily chart there. From a weekly perspective, this really shows you how important this level is that we're trading at now. I'm just going to extend the range here a bit. Look at this here. So we've hit this. This is 133, roughly 133 number. 1, 2, 3, 4. Here we are, the 5th time challenging it, struggling. No big surprise that it is struggling, but won't it be amazing if we can break through this and make all this support below us there, and the resistance above us will not be strong. And so this could be setting itself up for a very, very big move here, or of course a failure. But at this moment, the RSI is coming up, the MACD is positive. It's just tackling this, very important resistance that we're facing right now. I want to continue looking at the Norwegian crown, which we've been following for the last few weeks. This is dollar crown, so moving down here is the dollar moving down and the crown moving up. We have this big double top up here as I see it. We broke down here at 9.15, broke retest of the break point, and then now coming down, I believe, here. And I think we're on our way down to a minimum price objective of about 870, which is down here at the August low. I know today is a counter trend move for it, but I think that this trade is underway, moving towards the minimum price objective of its big double top here. Next one I'd like to look at is the yen. Now the yen's trading has had a big move today, really a big move today. Go back to the daily chart here. Big move up for the dollar, really showing its strength, particularly in the yen. The yen is in a downtrend overall. You can see lower highs here in the longer term perspective. It's not following the other pairs, but moving strongly against the dollar. It has been moving strongly against the dollar, and it's in a, I would say, a 104 to a 103.80 up to 105 trading range, but really continuing this pressure of lower highs in the dollar and strengthening of the yen. If you want to see really exciting, then I think the New Zealand dollar yen is the way to see it. And I think this is a great chart here. We burst higher here. This is the New Zealand dollar strength versus the yen. We've formed this, you could call it a symmetrical triangle. We're trading maybe about to break out of it. I do think to the upside, and this will be a continuation chart if we do break to the upside. Looking at this from a longer term perspective, look how important this is here. 1, 2, 3, and this is, I think, breaking out through this to a new high here. The MACD, weekly MACD is positive. The RSI is pointing up nicely, and we should move towards this resistance here at 73.20, and then towards the more substantial resistance at 75.50. But this whole area here from 68.20 area up to 71.80 has been is really some sort of not a flag, but a rectangular consolidation. I think we moved up into it, and we're going to move up out of it. So this could be a great bull trade here. Australian dollar now. And as we move down these currencies and get more exotic, more commodity related, then the picture becomes stronger for the currency, and it's really the place where you can most clearly see the pressure on the dollar. So here, this is staying with the weekly chart here. The Australian dollar broken out of this pattern here, this triangular pattern here, and now moving to the daily chart to get some more detail of it. We're pausing a little bit at the moment, and the MACD has lost momentum. The RSI is diverging slightly, but I think it's still moving up, still going to move further. There is light resistance at 73.57 and the August high back here at 74. But this is a good dollar weakness play if you want to participate in that. But the best place of all, as we've been saying, is the Rand, the South African Rand, and the Mexican peso. I'll just show the Mexican peso for the sake of time. Here's the Mexican peso, so dollar peso, so this is dollar weakness here, and this is where you can really feel the dollar weakness is in these emerging market currencies. So going down very strongly here, still looking like it's heading lower. The weekly chart here, look at this. Now we're coming back in all these markets. I'll just quickly show you the Rand in a second, to very, very strong resistance, a very strong consolidation support below 20, maybe at 19.5 here. But look, it was years trading in this range here. And so this should stop the fall, that is the rise in the Mexican peso. And here in the South African Rand, we've got a similar picture. Here's the big consolidation in the weekly chart around really intensifying at 15, but we're heading towards it now. to punch our way into it. But the steep drop, the fast drop in the dollar that we've been seeing in recent weeks, I think will slow up now as we move into this substantial area of dollar support.
Trevor, can you,
Yes.
we have a question from Ravik Spence. He wants to know about the US dollar, Canadian dollar. Have you
the Canadian
moment
dollar.
to take a look?
Right. Yes, sure. I've got time. That's a good one.
Okay,
so here is the weekly chart. This is one we've talked about, this major support before. I've put it in as a sort of zone because we've got several lows here at 130.25, but we've got probing lows down to 129.50, that sort of area. But so we've got this zone of dollar support here, and we're testing it here now. The Canadian dollar wants to go higher, but it's very, very difficult to get through this big area of support here. In the shorter term, this is the trading action around that area of support. So the pressure is on, every high is lower, so down, pushing going on, but then there's just this great big wall here. And it'll be very hard to get through here. Not say it won't get through it, and then if we do get through it, then it will release a substantial amount of energy upwards for the Canadian dollar. But in this comparatively narrow zone here, we need to get through it, and it's an important and powerful area. Okay, so now Bitcoin gone parabolic, as I said. And
excellent.
It has. Parabolic, of course, is a mathematical shape, and it's gone steeper and steeper, and now it's gone virtually vertical. The weekly chart is powering ahead. We see the 2017 high, the all-time high here. And from a technical analyst point of view, you should be long, but the problem is what to grab hold of, really, from a technical point of view. Apart from the 2017 high, it's very difficult to say anything else about it because the support is so much, so far below us here. So let's go to the daily chart now. And we've come up, as you can see, very, very strongly. This trend, as measured by the ADX, average directional index, is at 55. That's a very high reading, telling us what we can really see, which is we've got a powerful trend. The RSI is making higher highs. It's very strong, yes, it is, but it's not diverging in any way at all. It's still very, very strong. Just, tailing off a little bit here in the last couple of sessions, and the MACD, of course, is very powerful. And so I've made a little bit of time to really talk about how you handle a market which has gone parabolic like this. And if you were long of it and you were using a trailing stop loss, it's a difficult one. We've powered ahead so strongly, but I want to show you two different stop loss techniques that you might be able to use for this. If you are using stop losses, you probably need to keep your stop loss a little bit far away because this market is not going to go totally in one direction. We do have meaningful pullbacks in intraday or even over a couple of days in this market, and who knows where it's going, how far it's going to go. And we want to stick with it while it's going up, give it a little bit of room in case it pulls back. But of course, we know how this bull run could evaporate like it did at the end in December 2017, the last time, and it was over in a flash. And very, very quickly, we'd lost, we lost half the price very, very quickly. So how might you operate if you were trying to protect your long position in this? One of the ways is to use the indicator called the parabolic. This is developed by Wells Wilder. Many of you will know it. Parabolic SAR, stop and reverse is what it's called. It's meant to be a trading system. People don't like it because it doesn't really make money. But some people sort of throw the baby out with the bathwater. It is particularly and actually uniquely good in one particular circumstance, and that's the circumstance now when the price itself has gone parabolic. I leave these acceleration parameters as Wells Wilder defined them, and here you can see that the stop loss is trailing up here and moving up with the price, but better than any other stop loss technique. If the price accelerates, it will accelerate too. It's got an acceleration factor in it. So unlike a normal stop loss, a normal moving average, which is not variable, constantly variable, this one is responsive. It's got intelligence associated with the speed of climb. And you can see this most clearly here on the weekly. If I put the parabolic on the weekly chart, you'll see how it's powering away. As the price powers away, the parabolic accelerates. I know you wouldn't use this one because it's a weekly one, but look how these are separating from each other. I'll just zoom in here. And you see here, it's jumped from here to here, here to here. The jumps are bigger and bigger. Next week, it will be right up here. And this type of stop loss is unique in how quickly it follows the market. Other stop losses won't do that, and if the market goes vertical, it will really jump and follow tightly behind. That's Wells Wilder's parabolic. The other technique you might use in these circumstances is the Japanese candlestick pattern of Marabousu. So let me show you this here now. This candle here is, by my definition, a Marabousu. Some of you won't know what I'm talking about. Some of you will say, yeah, that's not a Marabousu. A Marabousu should have no shadow on the top at all. I think it's very unusual to have a Marabousu with no shadow on the top. There's a very small shadow up here, means a small amount of profit taking. What we've got is this very, very powerful candle here. And what the way you would use this to place a stop loss is to take 50% of the body of this candle. So in candlestick charting, in Honma's tome, the Sakata Constitution, he likened a candle like this like a battle line. When you're facing the enemy, you must hold the middle of the battle line. The middle is the most important point to hold. 50% of this here. Now for this candle, I can tell you the 50% of the body of this candle, I'll just put the price on here. You can see the opening was at 15,897, and the close on this candle was 18,493. 50% of that would be 17,195. So just above 17,200. So this gives you a good place to place a stop if you are going to use the Marabousu. I'll tell you an interesting story about this. Don't forget, what I've just told you there was recognized and written down and devised in the 1700s by Japanese traders and written down by Sequoia Honma in the Sakata Constitution. I was at a conference and there was a Japanese guy, and he was the subject of his talk was, is this really true? If the market holds the 50% level within the next 2 bars, it is a very strong move and it will keep on going up. But if it breaks the 50% level, which in our case is 17,195, within 2 bars, that's within 2 weeks, then this is a top in the market and we're going down. Because we do see that this type of candle sometimes is a candle illustrating that we're powering ahead, or sometimes it actually occurs at a top in the market. It's sort of as a climactic candle. So to know which one it is, we place the stop loss at the 50% level, which is at 17,195. And if we don't break that within 2 bars, which is 2 weeks, then this is what it seems, a rampantly strong candle. If we do break it, then it's a top in the market. So just share with you those 2 methods of capturing profits when the market itself goes parabolic. Okay, moving on to commodities now.
Actually, Trevor, we have a question in.
Sure.
If you don't mind. It's from Kamal Al Adil. Thank you very much for your question. He asked, do you think Litecoin, I think he means Litecoin, LTC, will be the replacement currency for the USA? Do you ever see cryptocurrencies becoming mainstream currencies?
Yeah, I don't think it'll. You can. I can answer that quite definitely by saying no to that, because we know. Well, only because it wouldn't be Litecoin, it would be Bitcoin if it was any.
Mm-hmm.
The reason I'm not saying it shouldn't be Litecoin. Actually, I can see a lot of reasons why it shouldn't be Bitcoin. But the thing is that we have a lot of data about cryptocurrencies. It is a digital currency, so we have a lot of data. And one of the things is we can see the proportions and the trends in the use of different currencies. And if you're interested, I can direct you towards sources of this data. And by far, Bitcoin is the coin with the largest network compared to the others. So if it would ever replace the US dollar, it would be Bitcoin, not Litecoin or Ether or any the other ones currently. But we can watch this and watch it day by day. But I think it's none of them actually. I think it's a cryptocurrency which hasn't been invented yet, and it will be a stable coin issued by a central bank. And that is very close. That could be in something that happens in 2021, threatened by the prospect of having it being done by PayPal, being done privately. The central banks are getting ready to offer digital versions of their own currencies, but as stable, fully backed currencies, therefore overcoming the volatility aspect, but constructed on a blockchain. And so I think that there will be a replacement for the US dollar. There's so much wrong with the dollar, particularly the settlement system of the dollar, that if they don't change it, don't offer a digital version of it, it just won't be the world's currency any longer. So if they want to maintain something called the dollar as the world's currency, I think they have to do it. But I don't think it'll be Litecoin.
Mm-hmm. Well, thank you for your question, Kamal. I hope that answers it.
Yeah, thank you, Kamal, for that. Okay, now I have to hurry on a bit. Let's go to gold. Now, gold is looking a bit threatening, if anything. It's been consolidating. I think it's. Let's take that parabolic off here, if I can. Now look at this. This is a weekly chart of gold, and I just read today that the trading department of JP Morgan made $1 billion trading gold in the last quarter. $1 billion trading gold. Okay, so they're doing it right, that's for sure. So gold has been going up, and then we've had this series of lower highs in here. And now we've got support, and to me it's breaking down. And if the dollar is weak, then gold should go up, but it's not. It's doing the opposite. And maybe, I mean, some people say that the sort of risk asset is moving into Bitcoin away from gold. I'm not sure that could be possibly true, because gold trading is so much bigger. But definitely gold is weak and breaking down. This is an potentially important break that's taking place here today, and we've got quite a lot of impulse behind it as we break down. So we've broken really the important lows in here, and should take us down. I mean, right down. I'm having to say this. I'm having to head for Fibonacci, actually. Just bear with me a second. I really want to get rid of that, and I will go to the weekly chart and do the same. And we've got the Fibonacci on here. Yeah, we're at 38.2% retracement of the rally from the March low up to the July high. But I think as a consequence of what's just happened, we're heading towards the 50% level, which is down here, and that would be 1760. So I think gold is in trouble, in serious trouble. Crude oil, here we are, crude oil. Crude oil's steady now, potentially heading towards this resistance level at $44. This is the WTI crude, and this is the weekly chart. Let's look at the daily. So here's the daily moving up nicely here. Got some power behind it. The MACD is positive. The RSI is pointing up. Bollinger Bands are starting to expand as we've got some power. So I think we're heading towards this resistance level. We've just got so used to oil being weak and hated that it's now changing. The S&P, which used to be the great story and the most interesting and powerful thing, is looking quite soggy. Here's the daily S&P, so we've got some resistance levels here, and it's really just consolidating here. And there's enormous internal rotation going on within the S&P. We had this multi-year dominance of the technology stocks, the FANG stocks, and so forth, and this is changing. Now those stocks are actually amongst the weakest stocks. Look at the NASDAQ compared to the S&P. The S&P was trading at or close to its previous high. The NASDAQ is not there. So those technology stocks are not. Look at Apple. Apple looking quite a soggy stock, you know. It's looking quite poor. Look at Alphabet. Look at Intel. All those charts, you know, Intel looking pretty horrible. Let's look at now. Microsoft actually is not looking too bad, but it's not great either. So yeah, so the technology stocks are not the leaders. The leaders are the old stocks, and so there's of course healthcare is doing well, but other sectors like mining and banking is beginning to do well. But I like more the Europe than the United States. I think United States has got headwind. So let's look at the FTSE first of all. Now, we've hated the FTSE for so long. It's been the worst performing market in Europe until recently. It started to pull up very, very strongly, the FTSE. Here's the daily chart of the FTSE. Yes, the last week it has consolidated a bit, but it's pausing below resistance at 6,600. This is the resistance here, and that's where it's consolidating below this resistance from back in June. So I think that will hold us for a bit, but we could break through here. I think the steady sterling is probably dampening the FTSE a bit. Let's look quickly at Germany. Sorry, we're coming towards the end of our time. So Germany, Germany has led the European markets up. Germany is unchanged on the year now. All the other European markets are still so far this year they are down, but the German stock market is now unchanged on the year. Here's the weekly chart. We've come back to the resistance of the gap. Sorry, you can't see it until let me just squash this up a little bit so you can see it there. See this gap here, very unusual, a weekly gap. We had two of them here. This is for your album of charts for when you're teaching technical analysis. This is a breakaway gap. This is a measuring gap here. These are classics here. So we're now retesting this gap and trying to fill the gap and then move on up. But the best is not in Europe, is in Japan and in Asia and in the emerging markets. But let's take Tokyo. Tokyo has made a massive break, massive break. I will show you what really the implications of this. I want to go to the 20-year chart. And in fact, I want to even bring in more data because I have to go back to 1991. Look what's going on here. We had these very significant tops here around 24,000. We've cleared that powerfully, and now we're going back to 1992's prices. We're retesting highs of 1992. It's a major break to the upside. The next resistance is at 27,000, which is from the 1991 high. The real strength in equities worldwide is in Japan and Asia generally, and the emerging markets. So this is other type of rotation from technology stocks leading, but the other type of rotation is the global dominance has moved significantly eastward. It was and has been for years been the S&P. And then I've got just a moment of time to hopefully I can indulge you for this. Let's just put that back there. Quick review, some of the stocks that we've recommended recently. We recommended, we liked a lot European stocks. We mentioned Daimler, for example, old-fashioned, makes things, really great things. And this is really a strong trend that we've got here. Hasn't broken its high yet, but it's powering ahead. This is rotation away from technology into old stock, a rotation from new to old, as we had in the title. So here it is moving ahead very strongly here, and you know, we did pick this up. Another one we looked at last week was banks, another out of favor sector. This is again sticking with the weekly chart here, powering ahead, continuing to move strongly up here. Barclays is also a good one as well in the European banking area. Let me just show you that here. And then I will finally end with today's recommendations. So here's Barclays powering ahead here. And today is a mining stock. Again, you know, it's hard to think that we'd be recommending mines and banks, commodity stocks. Next thing, it'll be old oil, Exxon and Chevron and things like that. But I think here we're breaking up powerfully in Glencore. So this is the weekly chart of Glencore here. And so we've got a series of tops. We're breaking that there through that resistance. I think that there's a clear run now to 220 on Glencore, where now we do pick up some resistance from the fall. But this is, you know, a rotation change. We're not used to it, and it is happening. So there's a lot of catch up. We can get a lot of swing from these kind of securities. They're so out of favor. And as they swing back into favor, and it dawns on people that they're not going down anymore, banks are actually good, and mines are good, and oil is good, then it will, you know, there's a lot of catching up to be done, and the move can be fast in these stocks. I think we're seeing that now.
Well,
okay, Dan, I've come to the end.
Thank you very much. Thank you very much, Trevor. You've done very well to squeeze it into 34 minutes. Congratulations. Well, thank you very much, everyone, for attending. We'll see you the same time, same place next week. If you do have any questions for Trevor, please send them to our email address, webinar@myfxchoice.com, and we'll pass those on to Trevor. So, Trevor, do you have anything else to say?
No, I mean, just be flexible, you know, don't get too stuck in the ways. You know, there was a time when you could just buy the S&P. Every time it dipped, you bought it and you made money. Those days are definitely over. We've got the structural weakness of the dollar, which is affecting many things, but gold in a surprising way. And look for this rotation, two types of rotation. One is a sector rotation, which is from the what we're used to, the new sexy things being great and leading the market. Now it's the old unsexy things that make things are starting to lead the market, and so you know, I think this is going to be a feature of 2021. And sorry, also rotation from the US market leading, you know, for many years the whole world. I think that is there's a new trend developing there, and the leadership is going to come from East and the emerging markets. Thanks very much, everybody, and may the trend be with you. I look forward to next week.
Thanks, Trevor. Bye-bye, everybody.